If you're here in DC, our next speaker needs no introduction. I have the privilege of knowing him for a long time. As many of you know, I am a recovering politician, aspiring banker, coming out of the greatest borough in New York City, in Queens. Maybe arguably the second greatest is a borough called the Bronx, and Congressman Ritchie Torres, I saw your hands up there, Ponce Bank. Ritchie Torres is not just a leader here in DC, specifically around digital assets. I mean, he was talking about digital assets and legislation and regulation long before it was the sexy thing to do. And he's still doing it, and he's championing not from any one side, but from the middle, and has been a real champion. And I will just give him a plug, okay? Election seasons are coming up, and so make sure you pay attention to Ritchie Torres. He is someone who's not gonna be a leader just for today and just for this year, but is gonna be a leader here in Congress for our industry for years to come, has been vocal on financial services, and really excited to have my friend, Congressman Ritchie Torres, come and speak. Moderated by Brendan Pedersen of Punchbowl News, who's also our media partner today. Thank you guys both so much. Come on up, Brendan, Ritchie.
Thank you for joining us. My name is Brendan Pedersen. I'm joined here with Congressman Ritchie Torres. We're going to talk about pragmatic progress and policy, and I don't think there is a better person to have that conversation with than the Congressman, because not only is he solidly in the middle of the caucus in a lot of ways, but like he has been at the table for these conversations for a long time. And we're glad to have you. Thanks for being here. I want to start by like getting into your philosophy here of fintech, because you and I have talked a lot over the years about your relationship with the fintech sphere, sometimes crypto, sometimes traditional finance, and you're never like, you're willing to have the conversation. You take industry seriously, but you're not exactly like a tech booster either. And so unpack that philosophy for me. How do you approach this fintech world? Sure.
I could project my voice, but
You are mic'd up.
I'm mic'd up. Okay, great.
You hear him all right? Okay, great.
Well, first, it's an honor to be here. Look, I'm not a blind cheerleader for tech, but I do feel throughout human history there's been no greater catalyst for human prosperity and human progress than technology. And I see it not only as a great disruptor of the status quo, but as a great equalizer of opportunity. You know, there are those who divide the world into two. You know, the world of atoms and the world of bits, the physical world and the digital world. And in the physical world, you know, public goods like housing and healthcare and higher education have become exponentially more expensive, whereas televisions and phones and computers have become exponentially less expensive. And the difference is technology. Like public goods, which tend to be insulated from technological disruption, are more expensive and more scarce, and private goods, which tend to be subject to technological disruption, have become more affordable and more abundant over time. And so I apply that logic to every sector of the US economy, including finance. And I do feel the most common complaint that I hear from the lowest income households and the lowest income businesses is a lack of access to capital. And I feel like one of the challenges of Congress is to figure out how we can affordably and safely expand access to capital for those in greatest need. How do we create, you know, much has been said about abundance. We've heard about energy abundance and housing abundance, but I think we have to think as deeply about financial abundance. How do we affordably and safely create abundant financing for those who need it in American society? And technology is the key. I think technology, technology is the road to affordability.
How do you think I'll say Washington in general, but specifically the administration, how do you think they are doing in terms of actually enabling this policy for good? Obviously, there's a lot of pro-industry stuff happening, but there's a lot of other stuff happening. How do you feel about what the admin is doing in this space?
I mean, I felt there were moments when the Biden administration was too hostile to innovation. And then the problem with the Trump administration is that everything seems to be personal profiteering. So I feel like we've gone from one extreme to the next, and I would love to see an administration that strikes a thoughtful balance between innovation and stability and figures out how do we harness the power of fintech to make financing available to more Americans. You know, one thing that I found striking is during COVID, the Federal Reserve reported that 1/4 of black businesses applied for PPP loans, not through traditional banks, but through fintech. And so more and more underserved communities are gravitating toward fintech.
I promised one news of the day question.
Well, there's nothing happening in D.C.
Look, the House is having a hearing right now.
No censures, no.
I'm missing a hearing on
No
deposit
Democratic
insurance
infighting,
right
so-
now. Like, the House is back.
It's as if the government shut down.
I
So.
know. Okay, I want to ask you about a not DC question very briefly, looking back in New York with Mayor-elect Mamdani. Do you think, I'll be honest with you, when he won the election, I had this thought of like, I don't know what he thinks about crypto. I don't know what he knows about fintech. And I Googled it, and I found absolutely nothing except for a hallucinated Google AI answer that suggested that Mamdani was a Democratic staffer who briefed House Democrats on crypto many months ago. It was very weird. Suffice to say, I don't know much about him. I'm curious how you feel about him as a business, his relationships with the business world, and what he may or may not do for fintech, crypto, et cetera.
I have no idea. I mean, I mean, you know, most financial policy is set at the state and federal level, so there's no real role for the mayor to play in setting financial policy. And so I don't know his views on fintech, and I would not dare to speculate.
Great.
So I wish I could give you a more provocative answer, but.
That's okay.
Yeah.
I'm not always looking for provocative.
And also the role of mayor is much more banal than people realize. You know,
Yeah.
it's about sanitation, it's about public safety. I mean, you know, we have a grandiose conception of who the mayor is and what the mayor can do, but the reality is that the prestige of the mayor's office far exceeds the actual power. Like, the mayor cannot install speed cameras without the approval of the state legislature. He cannot raise taxes. And so it's a much more constrained position than the one we imagine in the public mind.
Okay. One last news of the day question, but it's tied to everything else that's going on. The Senate is working its way through its own crypto legislation right now. The House has said its piece. It advanced the Clarity Act and the Genius Act, but we don't know what is going to happen with the Senate and market structure. Can you give me a sense, if you have any, of what happens to the crypto sector if we don't get a market structure bill this year, or even this Congress? Just from my reporting, it seems like they have a lot of work to do. Where does that leave the industry if it doesn't happen?
I mean, without regulatory clarity, there's going to be a ceiling on the growth of the digital assets industry. You know, what is lacking, you know, especially during the previous administration, there were conflicting interpretations of the law. So the CFTC said that Ether was a commodity. The SEC said that Ether is a security. Right? Those are two mutually exclusive classifications under federal law. So if you're receiving conflicting directives from your regulators, now how can you function as a company? I mean, I would argue that innovation, entrepreneurship has no greater enemy than uncertainty. And I feel like the burden falls on Congress to provide regulatory clarity where none exists. You know, think about it in the Supreme Court context. If there are two circuit courts that have conflicting interpretations of a statute, the court would often take up that case to resolve that circuit split. I feel like Congress has to resolve the regulatory split between the CFTC and the SEC on the question of digital assets.
Can you speak at all to, let's just hypothetically, like market structure doesn't happen this year, and then the House turns blue next year. Do you think that the Trump administration and a Democratic House can get crypto legislation done? Is that possible under this climate?
It all depends on committee leadership. I think it's fair to say that Chair Waters is much more skeptical about digital assets. So it all depends on committee leadership.
Okay, I'll take that. Getting more at the heart of what we want to talk about today with all things pragmatic and policy, I wanted to get your definition of something I hear a lot about, but I don't always make people define, which is responsible innovation or responsibility in this space. What does that look like or mean to you?
I mean, it means that you have innovation that provides for both affordability and quality in the sense of consumer protection. So, you know, take a concrete example, earned wage access, right? I believe in the basic principle that we all should have immediate access to the money we earn. The notion that you have to wait 2 weeks, or in the case of House staffers, a whole month before accessing your own earnings is an absurdity. It should be a relic of the past, especially in a world of advanced technology. And so there should be a federal framework for regulating earned wage access. There should be a free option and a fast, affordable option. And there should be clear guardrails, no collections, no interest or compounding, no credit reporting, maximum protection for consumers, no wage garnishment. So that would be an example of, creating a framework that enables the earned wage access industry to thrive while at the same time protecting consumers and providing people with real-time access to their own earnings.
We've been kicking around earned wage access policy for as long as I've been on the beat. I'm curious what you think about what it would take to actually, or how close are we to actually getting a legislative solution done here?
Look, hard to know how close, but I'm the Democratic lead on EWA legislation.
With Congressman Style?
With Congressman Style, and it's not rocket science. Like, we can design EWA to be an affordable, safe alternative that displaces payday loans and overdrafts. And I think the greatest value of fintech, when done properly, is affordability. Like, fintech has been able to offer, more affordable remittances than traditional money transmitters like Western Union. Right? It's been able to offer more affordable checking accounts than some traditional banks. It's been able to offer more affordable investing than some traditional brokerages. So we should be harnessing the power of fintech to make financing more abundant, more affordable to those who have been left behind by the legacy financial system.
Along those lines, I want to talk a little bit more about innovations that are coming down the pipe in payments, and the first thing that comes to mind is stablecoins. Obviously, the Genius Act is law. Yeah. It's being implemented. I'm curious what you view as, what stablecoins are actually going to do for Americans here versus maybe abroad. Because I hear people say, it'll be easier to use the dollar for payments abroad. Great. We in the United States have pretty set infrastructure for a lot of our financial lives. How do you view it? Is it just an institutional play at this point? Or will it actually change the way in which I use my money?
It's hard to know for sure. The use case internationally is much clearer because if you are in the global south and you have no access to a stable currency and you have a corrupt government that steals from you and you're susceptible to runaway inflation, there is a clear use case for stablecoin. Stablecoin has enabled hundreds of millions of people abroad to finally have access to a stable currency. I would argue the proliferation of dollar stablecoins is a projection of American soft power in the world. And the fact that hundreds of millions of people finally have a safeguard against runaway inflation, finally have access to a stable currency, is one of the greatest experiments in financial empowerment that's been undertaken. So that's my view on stablecoin. And then on remittances, look, I have immigrant constituents who have to pay exorbitant fees simply to transfer their remittances to their loved ones abroad. About more than a decade ago, the New York City Department of Consumer Affairs did a study and found that the lowest income New Yorkers spend more than $200 million a year in check cashing fees. And that places like the Bronx, which is primarily Latino, and Southeast Queens, primarily African American, are the hardest hit. And so I feel like a technology like stablecoin can digitize, tokenize the dollar. Blockchain enables real-time transactions. And the ability to move a dollar at the speed of the blockchain has the potential, has the proven ability to create a better and cheaper and faster payment system that liberates the lowest income from the high fees and long delays of the traditional financial system. So that, to me, is a use case that brings greater affordability to the lowest income.
I think along those lines, I have often heard you say that innovation and consumer protection are not mutually exclusive, but I'm curious, how you think Washington in general is doing on this right now, and how you as a policymaker try to strike that balance.
Look, I think you often have one side that says innovation can do no wrong. And then you have the other side that often says innovation can do no right. And anything that's innovative must be exploitive. It can be exploitive, but the purpose of a federal regulatory framework is to harness innovation for the good of the public. So I'm convinced that Congress has the ability to strike a thoughtful balance between innovation and consumer protection. But the greatest scandal is not that we're failing. The greatest scandal is that we're not even trying often.
Yeah, that makes sense to me. I think I want to, maybe for one of my last questions here, want to fast forward several years, 5, 10 years, and ask you what you are thinking about in terms of the next stage of financial innovations. Like, we're talking a lot about AI. I'm curious if that is what you yourself find yourself thinking about, or are there different arenas that as policymakers we should be paying attention to that maybe we're not in this exact moment of year one of the Trump administration?
Look, it's hard to say because the world is changing at a pace that is unprecedented. And I do feel AI is the most revolutionary technology of our time, every bit as revolutionary as the advent of writing or the advent of the printing press. And my own life has become integrated with AI. Like, I use it to research, to fact check, I even use it to count calories. And I'm cautiously optimistic. I know there are widespread apocalyptic predictions of mass unemployment and destruction and human extinction. I feel like much of that is more science fiction than actual science. I am convinced, obviously there's going to be some measure of displacement, but I do feel like the net effect of AI will be an improvement in human productivity. Like, I've experienced AI as a massive productivity tool.
Do you share any of the fears that I see online just about every single day about the bubble in AI investing in Wall Street? Do you think that is, people talk about the circular financing of it, I'm curious where you sit on the risks.
Yeah, and I want to be clear, asserting that there's a bubble is different from asserting that the technology has no utility. Like, railroads have utility, but it nonetheless had a bubble, right? And the question is, are these companies going to generate revenue to pay back their debt, fast enough to pay back their debt? It's all about timing. I do worry, almost all of the growth in the stock market is coming from the Magnificent Seven. I think in the second quarter of 2025, like up to 40% of GDP was driven by AI-driven capital investment, and we're actually investing more capital in workplaces for GPUs than we are for actual people. So I don't know, but then again, these are the companies that are investing the most capital have actual cash flows. I mean, the Googles, the Microsofts, the Amazons. So there's reason to think there's a bubble, but I have no doubt about the ultimate utility of AI as a revolutionary technology. That, to me, is going to reveal itself clearly over time and has revealed itself. So.
We are going to leave it there. Congressman, thank you so much for your time, and thank you all for listening. Thanks for having us.
Of course.